Hello, everyone. Thank you for stopping by. It's Wednesday, May 20th, 2026. The weather is almost perfect here in the Midwest. This is the market headline report. This thing is completely out of control today. Crude oil, extraordinarily volatile, news headlines everywhere. The market is swinging hundreds of points in NASDAQ every few minutes. We are going to get NVIDIA earnings after the close. We got the EIA release of inventories this morning as well. Let's see what is going on. The headline is Tech Junkies binge on AI while crude runs out at Cushing. Surging AI demand, empty reservoirs, the collision is coming. The AI gold rush. Billions are pouring into data centers, chips, and algorithms. Tech giants race to build the future powered by electricity, water, and endless resources. The exact thing that we're having the biggest problem with right now is energy. Investors chase performance, no one's watching the tank. This is the equivalent of everybody gambling in the casino while illegally parked on the sidewalk with their gas tank leaking in front of the smoking area. So, what could possibly go wrong? Cushing facility in Oklahoma is at about 7% of its total operational capacity. We're going to get into that in just a moment. The reality is that the inventories have hit critically low levels. We basically have a few weeks left if they're not replenished before they drop below the operational minimum, and then the facility has to close. I will explain that more in detail in just a moment. Analysts warn the next shock won't just be a surprise, it'll be a shortage. No room, no relief, Cushing storage almost gone, a couple million barrels above the operational capacity. This is critical. This is catastrophic. The inventory numbers for this morning, as released by the EIA, let's look at these. I had Gemini pull the inventory report. Commercial crude down 7.86 million, estimate 2.82 million. Current total stockpile 445. It's actually a little bit below that. Gasoline down 1.55 million. Forecast down 2.66, so less gasoline. Distillates up 0.37. Market forecast was down, so there were actually distillates gained slightly. Europe is still going to run out of jet fuel very soon, so these are distillate numbers over here across the pond. Cushing hub down 1.6 million. Key takeaways from the report: the massive 7.86 million barrel drop outpaced expectations, 3 times more, largely driven by elevated domestic refinery demand and strong export pull following broader geopolitical supply constraints. The war is completely out of control. It just gets worse and worse and worse. There was more news headlines of Pakistan reporting final negotiations in the peace deal agreements were imminent. We've heard this several times before. Nothing has ever amounted to anything. All of the statements of the same caliber in the past since the war began have not amounted to anything. It's all hype. It's all fluff. There's no substance behind it as of yet whatsoever. Refinery activity. U.S. crude oil refinery inputs average 16.3 million barrels per day, with operations hovering at 91% of total capacity. That's going to keep going down. Capacity looks good right now, but the deficit is enormous, and we cannot possibly produce enough energy for ourselves as well as send it all over the world to plug the hole that the Strait of Hormuz crisis is creating right now. refined products. While gasoline stocks shrank by 1.55 million barrels, the draw fell short of the 2.66 million barrels analysts targeted. Meanwhile, distillates unexpectedly notched a modest build of 372,000 barrels against predictions of a steady draw. Those are the inventory reports numbers from the EIA. Let's check in with the crisis model. So we have the Hormuz deficit clock. The strait has been closed for 81 days, 16 hours, 48 minutes, and 58 seconds. Total barrels of crude oil lost 1.1 billion. We're losing 13.8 million a day, 104 million global daily demand, 91 million roughly effective supply, 13.3% of the world supply is missing. We're going to lose another 97 million barrels this week. The crisis is now 2.51 times the 1973 Arab oil embargo. With the updated figures from the EIA, we have added another metric here, the Cushing hub. So we got the new Cushing hub bar. This red line is the operational minimum. The operational minimum is 20 million barrels a day, is 20 million barrels, not 20 million barrels a day. Sorry, it's 20 million barrels. That means that there needs to be a minimum of 20 million barrels in the facility to operate. If there is not 20 million barrels in the facility, the pipe pressure does not work. The plumbing cannot draw up the crude necessary to distribute it elsewhere. So that number has to be maintained. We're at 22.6 million barrels roughly in the Cushing facility right now. That's 4.6% above the operational minimum. The capacity of the facility is 76 million barrels. It's down 95% of its total capacity. That definitely does not sound good. Gasoline stocks down 6.5% versus the 5-year average at around 210. Commercial crude at 432 million. That's 2% below the 5-year average. Distillate stocks at 104, down 10% versus the 5-year average. The SPR down 7% versus the start at 415. Planned DOE release of 172 million still in effect. The total SPR estimated draw right now is at about 93. We have not gotten figures from the SPR in a couple of weeks. I don't know if they're having trouble coming up with the actual number or what's going on here, but at 1.43 million barrels per day over 65 days since the March 16th release start, 2 weeks after the war, that would put us at about 93. So we're not sure what's in the strategic reserve right now because the figures have not been released for 2 weeks. It's $5.29 a gallon here in the Midwest for regular. It's around $6.65 for diesel. I will update this when I go out for my little grocery store trip this afternoon. And I am going to actually roll down the windows and I'm going to enjoy my trip to the grocery store in my car that runs on gasoline because in a few months, if this keeps up, I may be walking or skating or pulling a wagon to the grocery store because this situation is absolutely out of control. While everybody is hyper focused on their stock portfolios and sending the NASDAQ to the moon, we have the greatest energy crisis in history. Let's look at the price action today. So crude, on the information that we have very substantial draws and the Cushing tank facility is approaching its operational minimum, the crude is down 600 ticks. Started off the session around 104, wars escalating, peace talk headlines, record inventory draws, and we're down 600 ticks. Let's look at the gasoline. The gasoline is down 2,000 ticks, about 8 grand per contract. So if you're long RBOB gasoline, if you bought a futures contract yesterday, the day before that, you got the most severe draws in energy. You have war escalation across the board in about 3 separate locations in the world: Ukraine, Iran, and now Cuba. And the gasoline contract is down 2,000 ticks. Crude at 97.80, gasoline at 350, basically. We had a catastrophic move in the crude oil earlier. Let's look at that. Let me see if I can get this just a little bit more zoomed in here so that we can actually see what was going on. So here was the crude oil around the inventory report. Oh, I'm sorry, this is the gasoline. Here we go. Here's the crude oil around the inventory report. So when the inventory report came out, shortly before the inventory report came out, we had crude selling off from 102.83 down to 9. So we lost about 300 ticks before the inventory report. And then later we had a couple of news headlines hit, and the thing took another nosedive for about 300 ticks right there. So we had 2 300 tick hits, basically, and not really too much else going on in the session. We are getting NVIDIA earnings after the close. So while the crude oil is getting smashed, we have the NASDAQ rallying a couple of 100 points off of the low. We have the S&P, which is sitting at, where is the S&P? 74.32. Let me take this off for 1 second. We can see that the S&P market is following suit with the NASDAQ. So it started out the session around 73.90 at US cash open. We've pretty much gone up ever since. So buy those tech stocks. Pay no attention to the world's biggest energy crisis. Just, keep plowing money into AI. The AI mania has gripped the market. Everybody is completely hypnotized with AI. I would like to point out something that I think is rather significant. So AI is going to consume a lot of energy. These data centers require more power than small cities. So the whole thesis behind the AI revolution is that it's going to have an abundance of energy available, a stable source of energy available. That energy is also going to be affordable. This is going to be orders of magnitudes greater than the demand for energy right now. Where are they going to get all of this power to fund this and drive this great revolution here? They've got the money. They could just print the money to fund the revolution. That's not a problem. But where are they going to get the power for it? That is what I'm really trying to figure out here. If we go to some of these other headlines, we can very clearly see the picture that is being painted for us. Iran's chief negotiator claims U.S. seeking to start a new war as Trump curiously teases final stages of talks. This is the headline that's changed several times over the last hour and a half. It began with Pakistan hints at final agreement. Negotiations are almost complete. That's what sent it down 300 ticks the second time, and now it's starting to change. The news headline just keeps evolving as more, shall we say, opinions are thrown into the mix. It's always Trump's opinion first, and Washington's opinion first, or Pakistan's opinion first, and then Iran always comes out later and basically says, no, whatever you just read or whatever you just heard, no, that's not the case at all. We are not cooperating with this. We're not agreeing to anything. There's no negotiations. We have no idea what you guys are talking about every single time. Goldman chief equity strategist warns momentum risks yielding to bonds. Bonds are rallying a lot. Bonds have been rallying a lot. That's a big problem with the yields going up. Meta axes 8,000 more workers, admits AI is watching replacing labor. This is the wonderful future of AI. More people getting laid off. More people are out of work. Sounds great, doesn't it? 3 super tankers carrying 6 million barrels exit the Strait of Hormuz. That's wonderful. I think they belong to China. Iran's got some sort of arrangement with China where they're allowing the Chinese vessels to exit. That's going to help China out because 70% of their oil comes from that location. So exceptions are being made. This one says the AI economy part 1, looking beyond the facade. Is the AI investment boom genuinely broadening this country's economic footing or weakening the labor force? Well, it's obviously weakening the labor force at Meta right here. So we can see direct consequences of the AI revolution hitting the market right now. Oil prices extend decline after the largest crude inventory drawdown in history. Cushing take bottoms loom. This makes obviously absolutely no sense. As I just previously described a few minutes ago, we have the largest crude inventory drawdown, which is a reduction in supply. The price is supposed to go up. Supply goes down, price goes up. In this dimension, in this alternate reality that we live in these days, the supply goes down and the price goes down. So does that mean when the supply goes back up again that the price is going to go back up again? Or is it supply goes down and prices go down, and then supplies go up and prices go down? Right? Makes perfect sense. This one is definitely worth thinking about. Xi warns U.S. against new Iran strikes, denounces law of the jungle as Putin talks energy leverage in Beijing summit. Putin and Xi are now in the process of their meeting, and they are discussing what all of this means for them. Xi warns U.S. against new Iran strikes. This is their way of saying, don't do it. I think they know full well that they're probably going to do exactly the opposite, that the U.S. is just going to continue to do whatever it wants. Well, while the U.S. is playing war games, we're actually running out of crude oil. This cannot continue for too much longer. They have about another 2 or 3 months of this before there is a major blackout where you will not be able to get the products at any price. So it won't just be higher prices. You will not be able to get this stuff. This is really incredible. I really am just amazed at what I continue to see here develop on a daily basis. I'm running the numbers, I'm plugging them into the model, and this is not adding up. The math isn't mathing. I see other YouTubers out there, other professionals in the industry, and the resounding theme between all of us lately is that this doesn't add up. This makes absolutely no sense. We are going to find out very, very soon just how serious this actually is. I'm taking this very, very seriously. I am preparing to start walking everywhere. I do think that there is going to be a much greater interruption than everybody is planning on. While the energy crisis continues to get monumentally worse, everybody is glued to their phones and their screens, staring at digits assigned to their portfolios, completely oblivious to the dangers ahead. We live in the age of complete ignorance and fantasy. None of this is real. None of it. No rooting in fundamental reality whatsoever. But hey, such is life, I guess. This is just how it is now. I'm looking forward to the next video. I cannot wait to see what happens tomorrow. The next 24 hours in the future should be absolutely awesome. We'll probably get some more news headlines. The war will probably continue to get worse. We'll get more bad news, and the stock market will continue to go up, and the crude oil price may just continue to go down. Maybe AI will figure out a way to 3D print gasoline, and I'm wrong. Maybe the market has everything figured out, and there's something that I just don't see here, that there's a solution here, and the market knows what it is, and I and everybody else that has a halfway decent grip on what's going on here, we're all completely wrong. We shall see. So take care. Make sure you try and hang on to your sanity in this environment. It's getting very, very difficult for me and, everybody else that has to live this, every day, because we have to pay for things like food and energy. We can't just print our way out of this like the elites can. So I will see you guys tomorrow around the same time. Be good. Stay focused. Do your best. Definitely prepare for some wild times ahead.